right, well, hello everyone, and welcome back to another edition of the Forex Market Preview. My name's Jason. If this is the first time you're watching one of these, then let me explain what we do here. Typically, what I'll do is take a look at some of the stuff that's happening into next week in the currency markets, show you some trade ideas, and also try and help you understand a little bit more about process and how we go about making decisions that's going to give us the most amount of profit with the least amount of risk. And today will be no different, although I am changing things up just slightly. I want to start doing, over the next several weeks, kind of a little series. And as many of you know, we use what we call a trader mind map to kind of lay out what the process is that every trader should go through, from what he does before he ever starts trading, how he writes his trading plan, how he does his money management, how he does his trade plan development, all the way over to his pre-market routine, what he does before he executes a trade, what he does during the trade, and then when he's done with the trade. And then we finish off with a bunch of stuff on record keeping, and we talk money management and trading psychology and stuff in there as well. And I want to start walking you through some of that stuff. Now, we have full courses that teach you all that stuff, but there's nothing wrong with me touching on each phase of it and helping you understand how the whole mind map is put together. And so what I'm going to be doing over the course of the next couple of sessions, I guess, is talking a little bit about that. But today, there are two specific things that I want to talk with you about. The first one being bracketing, and the second one being, and I'm not going to have my thing here, so I'm going to have to do this manually. The first one's bracketing, and the second one is what I call ETS, or entries, stops, and targets, and that's something that's inside of the trader mind map that I'll be getting into more detail on in a little bit. But let me switch over here, and let's just take a look at a couple of things. The first one is what I call bracketing. And bracketing can be done with patterns. It can be done with just individual, this is a trend continuation play or a structure trade. But bracketing is essentially where you take a look at the market and you say, all right, whether the market goes up or down, I'm going to have a trade. And here's what I'm going to base my trade off of, and here's how I'm going to do it. And so what I've got here is a pound dollar. This is something we've been talking about in the Syndicate being kind of the next level. It's something you could join and try out for about $1 if you guys are interested in doing that. But in the Syndicate, we were talking about pound dollar. And you can see on the daily chart here how the market broke structure. We broke this little a coiling pattern here, broke it to the downside, then we rallied back up, and I was watching this level here at 54.86s because that was the most recent structure level that got violated. Now, we violated this one too, but this is the most recent one, and so recent structure is what we want to pay attention to. And so if I drop down to, this is my daily time frame, so this is what I would consider to be my higher time frame. And this can vary based on you and how often, frequently you want to trade and how much time you have to trade. Your higher time frame may be a weekly chart or a monthly chart. But my point being is that this is my higher time frame. So if I want to start looking for trading opportunities, I'm going to drop down to my trading time frame, in this case the 1 hour chart. And here you can see my two little alerts that I've got set up here. And essentially what I did was I said, well, if the market comes up into this level to around 154.86s, I know that's a higher time frame structure level I want to pay attention to. So if the market comes up into that level, I want to be alerted because I want to be watching for some sort of reversal pattern. Maybe it's a large doji candle, or maybe it's a double top with bearish resistance. Double top up against resistance with bearish divergence on it. So there's a lot of different things that could potentially give me an indication that the market is going to reverse here, but what I want to pay attention to is this particular level, 154.86s. But what happened was we came up into that zone, but we didn't quite get up into the 154.86 level. And then the market kind of came back and we rallied up, and then we just kind of muddled our way down towards a previous structure area. And I took a look at this and I said, well, what happens if the market comes down here? I can look at this previous resistance level here, the resistance here before the breakout. And I said, what if the market comes down into this level here at around 154 evens? And I said, well, let me take a look. And so I grabbed my little line tool here, and I said, okay, 154, boom, let's put it right there. My stops have to go below the swing low here. Swing low at 38, so 28's for stops here. And then my targets would have to be up here against this structure level. Well, I took a look at that, and what happened was I had an inverted risk to reward trade. As you guys can tell here, I never want to risk in loss more than I stand to gain in profit. And so in this case, this particular level at this previous structure level back here didn't work very well. But what about this little internal level where the market found a little bit of a blip? What if I just moved my entry down just a little bit? Now all of a sudden you see that what was a trade where I did not have the opportunity to enter would give me a risk reward that would make a lot of sense. And then we may very well see the market come down into this zone at 153.87s and rally all the way back up to this previous structure at 154.86s, where I could then look for a reversal pattern to get short again. So what I've essentially done here, folks, is I've created a bracket where I have resistance looking to sell on the high side and an opportunity to buy at the low end. Now, it doesn't mean that that's what I'm going to do. It just means that now I'm paying attention. And one of the nice things about this TradingView software that I teach on every single week is that it's very simple. If I want to drop in an alert, all I simply do is right-click, go to Add Alert, and it will ask me, pound dollar, do you want to do it crossing? Do you want to do it crossing down or crossing up, greater than, less than, entering a channel, exiting the channel? How do you want me to notify you when this particular level is hit and how it's hit? And I just simply say, well, I just want to be notified if it's crossing that level. And then, of course, the value is already there. The frequency, do you want me to do it every single time that it crosses that level or just one time? So I put there, pop-up, a sound, so I'm notified. I can even get it to send me an email or a text message when that gets violated, so I can be aware no matter where I am in the world throughout my trading day. I go ahead and click Create, and boom, there's my little alert right there. Now, I don't particularly need that one, so we can delete that. And actually, it's probably this one here. Just go up here, click delete. Are you sure? Yes, and gone it is. And you can see I've got a series of alerts in here where the market that I'm watching in terms of the market right now. So that's the first one on bracketing. Now the next one that we want to talk a little bit about is called entry stops and targets. So I want to use something that we played with, or we showed you guys last week. Let's go out here to the daily chart. And in this case, we're looking at Euro Yen. We had the double top right here, followed by the break of structure, the deep break of structure. And I said, watch for the retracement back up into the 618. And as you can see, on Friday, we got the retracement all the way back up into that 618, giving us a potential sell. Now, based on the rules that we use for the 2618 trade, we don't need any added confirmation here. And the reason for that is we know the percentage of the time that this trade is accurate. And it's not anything glorious. The 2618 trade is going to be about 55% accurate or so. And so it's not like this thing's hitting 90% of the time. And that's one of the things that you have to understand about virtually every trading strategy that you're going to trade is that you're going to be wrong most oftentimes almost as much as you're right. And you've got to learn to deal with the losses that are going to come from break-even and losing trades. And you must maintain the consistency if you want to be successful. But this 2618 trade, which I have a full training on, by the way, you guys can go download it at tradeempowered.com and watch the whole thing. And it's like a 2-hour training I did on this. What we look for simply is, okay, if I'm going to sell here, boom, at the 618, where are my targets going to have to be? Well, hang on, I got to sneeze. Oh, goodness, the allergies are back. Okay. We're going to short the market here, 136.38. My targets initially are going to have to be here at the previous structure support level. That's the last place the market decided to reverse. Don't know why. Don't care why. We just look at this and say that's where traders came in and decided that they were going to buy up. Where do my stops have to go? Look left, structure leaves clues. Previous swing high coming in here at 138.90s. Probably want to get above the 190 handle. Let's go 139 handle. Let's go 139.20s for stops here. Right? We can do a little bit better than that if we want to because this is a higher time frame, but for the sake of argument, let's just use just above the spike highs here. Now, if we're correct the market should continue in the direction of the trend before violating the previous structure highs. That's the way this trade is based, the idea behind this trade. Now, what do I have on my risk reward? Well, you can see I can actually do this via, let me use this thing here. Let's do a short position. This is a nice little tool too. Kind of lets you quickly see what your risk to reward is here. And as you guys can see, my risk to reward is just a little bit better. I've got my target is 2.82% and my risk is 2.05%. So I have just a little better reward than I do risk. Now, what we know over time, guys, is that if I have something that is a greater than a 1-to-1 risk to reward ratio and is right more than 50% of the time, if I maintain my consistency, if I do it the same way every time, and if I'm disciplined and I take every trade that appears, then I know that over time I should have a very, very good chance of maintaining consistent profitability because I've set myself up for success. I've done the testing. I know what the particular trading strategy produces in terms of win-to-loss ratio, and I know that I have a greater than a 1-to-1 risk-reward ratio. Guys, you can't do much better than that. As I've said many times on this show, all we're doing here is playing the probability. What is the likelihood that this is going to be a winner versus a loser, and then what do I make if I'm right, and what do I lose if I'm wrong? When you put that stuff all in your favor, when you've got the deck stacked in your favor, it gets a lot easier to both maintain your consistency and your discipline and also to make money. But anyway, that's basically what we've got today. So there's a couple of trades that's out there. We also have some stuff. I'm not even going to get into it because it's pattern stuff and we'll save that for another day. But I'm going to start putting together here over the next couple of weeks some training on the mind map to kind of show you guys, to get the wheels turning in your head on really what you need to be doing as a trader if you want to be successful. And this is a mind map that we created over the last decade or so of teaching traders and figuring out what they struggled with, what they really needed to understand about trading, and how to kind of give them a blueprint that would help them understand the entire thought process from start to finish of trading. And I want to share that with you guys so that you can begin to understand where the holes are in your own strategy and where the holes are in your thought process. Because there's a lot of stuff, most likely, that you should have learned that you never learned. And unless you understand what you don't know, it's really hard to move forward and try and go out and seek that information. And so I want to start working with you guys. So make sure that you tune into that. And if you're not subscribed to this, then you need to go to the website, tradeempowered.com, and search for the Forex Market Preview and make sure that you sign up so that you get the email every week. Because it's hard to remember to come back to YouTube. It's very easy. I send you one email every single time I release a video, and it's once a week. I send you a link, tell you, hey, here's the video, go check it out, and that way you never forget and you never miss a single episode. So until next week, guys, good luck, good trading. I'll talk to you then.